Hello, everybody. Hope you're having a great day. Rezun here. I'm here with my friend and uh, a great technical analyst, Bast, today. And in this workshop, we want to talk about backtesting and journaling. Uh, this is the topic actually that is very important in trading, that it's kind of underrated, and I don't really see like anybody talking about this like the as much as the other topics. So here in this workshop, actually we're going to bring our experiences and like our methods in backtesting and journaling for you. I know Best here uh, is great at this stuff, and like if you follow him and if you know his work, he's like he has a great journaling tool. He prepared a template, and like around the nest, he's the one that always tells us and help people regarding that. So we're going to have a great conversation with him. Yeah, if there's something to add, Best, please go ahead.
Yeah, no, thank you everyone for joining. Thank you, Restaurant, uh, for your introduction. As Rasun said, backtesting and journaling is something normally people that starts trading doesn't want to do because they don't want to put some extra work on whatever they are dealing with that in that time. But I really think it's extremely important to know how to do it and practice on it because this will give you an edge on trading, on your trading especially. Um, Backtesting will give you the confidence you need on the strategy you are utilizing at that moment, and journaling will give you the metrics that will give you an edge on whatever you're dealing with. If you are having a lot of stopped outs, if you are having super profitable month, so what you're going to repeat, what you're going to stop doing, your psychology habits that you want to stop. So in the further development of this session with Return, I will show you and give you a quick glance of my trading journal that I have prepared for you, in which I will show you how to build a backtesting and trading journal for you to be able to do it yourself.
Yeah, and as you said, it's a type of thing that I say I say a lot of people that put a lot of work on trading, learning new stuff, new methods like price action, indicators, everything. And when it comes to like journaling, they always have problems. And to be honest, I had these problems as well. I prepared like more than like three or four templates for myself, and I just didn't use them at all, or maybe like for 2 weeks. uh, it's gonna be great if we know like your experiences as well. But uh, the thing is, it's it's not really a super exciting task to do. And when you have like winner trades, you are so excited, so pumped, you just don't want to like do anything after. And when you lost your trade, like you're upset and like you're mad maybe. And you don't want to do that. But honestly, there are certain habits that I myself, when I approach them, one of them is journaling. Actually, the other one is building a strategy and backtesting it and finding my flaws and like improve it over time. These are kind of these are the certain habits that honestly I think made me profitable in my like career and trading. And as I said, they're not super exciting, but I think necessary. And maybe maybe and what I did to actually you know approach them, it was that I understood that they are not like they are not like I am not the guy that can do them like regularly and over time. So what I did was I tried to make them like uh, more exciting for myself. Okay, and I don't say everybody should do my methods, but the thing here is uh, I think people should find a way to do these kind of tasks exciting for themselves in order to approach them. So I want to know your opinion about that. It was totally my opinion here. And yeah, what's your comment on this?
Yeah, for sure. I totally agree on you actually because uh, we all see these complicated Excel sheets that you have to fill in after you take a trade, and you're not even sure if you have to take the trade because you are not certain about your strategy. And then you say to yourself, like, okay, I'm going to add all of this data into this complicated Excel sheet that is giving me data that I don't even understand. So that's why I took the approach to make this trading journal on Notion, because Notion seemed to be like a very friendly software for me to actually input data that I wanted to see. And I made it as easier as possible with the necessary data that everyone is going to need at the end of the day. And because I don't like complicated stuff. It doesn't mean that I don't study them or I don't go through them, but I tend to
Yeah,
make complicated stuff look simple. All right, and
yeah,
that's something that many people have told me on my Twitter account because I constantly share trade setups, and my charts are basically only lines and uh, telling you what's possible, where's the market headed,
hmm,
and is literally as simplistic as I can because I want to share that to people. Like, okay, trading is already complicated. Don't make
yeah,
it even more complicated, right? Let's make it
yeah,
simple and know your things, know your strategy, know your backtesting, know your journal, and that will take practice, right?
yeah, exactly. And one other thing that like I don't really see this as well is uh, there's journaling and there is reviewing. I think there are different topics actually, and what I did was exactly like you said. I tried to uh, I try to pick the options that are necessary for for my future review, and I put them in my in my journal. And uh, I honestly think there should be also a fun and exciting way for you to review your trades in a weekly basis or monthly basis, up to you actually. If you're a low time frame trader, maybe even daily basis. But uh, for example, one thing that I'm doing currently is I record uh, like 2 minutes trade reviews every week. And if people here follow me on Twitter, they know what I'm talking about. Uh, sure, my approach to them is they are content, and I use them like to promote myself and stuff. But the main reason, to be honest, behind them is they are a way for me to review the trades, the trades that I get, and they are on my journal, and they are not. So and that's because back in the day I was thinking to myself that mm, sure, there are some trades that I'm taking, right? So I journal them, and there are like more trades that I don't take. So so I try to find a way for myself to approach them as well. And yeah, that's basically my take on the reviewing side. What do you do for when you want to like review your journal, your trades in weekly basis, monthly, and like, can you please explain more?
Totally. I totally agree on you with that. I do a revision of my trading journal on a weekly basis. I'm a swing trader. I don't trade below 1 hour. I don't really like and have bad experiences on trading long time frames. It's not my style, and
Mhm.
that's something important to mention. Actually, like know your style, like know your time availability for the market, and what's your approach. How do you want to trade, and that is something that if you start trading and journaling all your trades, even if them are like lower time frames or higher time frame trades,
Mhm.
if you review them on a weekly or daily basis, you will find yourself catching this flow and tell yourself like, okay, all of my trades that are on a lower time frame are on a loss, while the trades that
Mhm.
I took on higher time frames went well, and the win rate is, I don't know, like 50, 60% on all of these trades. And okay, so I will stop trading lower time frames because it's not my thing. It seems that I'm getting too anxious. I'm
Mhm.
getting entries too early, or I'm getting stopped out every time. So I'm going to stop that, and that all of that knowledge is going to come from you following your trading journal on a daily or weekly basis, and I do it on a monthly basis as well. Okay, so
Mhm.
yeah, I totally agree on you, and that comes up on something important as well. Like you mentioned it, the importance of having a strategy and knowing your strategy. What you can tell about it?
Yeah. So basically, I think one of the main things that someone needs in order to like survive in the markets or stick around maybe is having a strategy. You don't really see people that are randomly buying and selling the stuff like last more than 1 year in this space. And like, I think people who stay in this space, especially in crypto, man, because crypto is like more popular these days, and yeah, I think because of the non-KYC exchanges and stuff, it's more accessible for people to like trade them, and we have like leverage as well, futures. Uh, and I think the difference between the people who stick around and eventually like succeed is having a strategy. It's not like it has nothing to do about the like IQ or the like background, uh, but it's all about strategy and consistency to of certain things. And when it comes to consistency, I do really think uh, consistency is not all it's not all about you having consistency on like uh, uh, sticking to your plan and a strategy. It's also like journaling your trades. It's also like uh, taking breaks. It's also like I don't know, have when you like lose some trades, have some get help from people in your community, from friends, right? So I think we also need to have consistency in that regards as well. And the strategy thing in itself is kind of easy in the first place, but hard after time passed. So and why I say easy, because you literally you can like open YouTube and search for trading strategy, and you're gonna find a strategy, back tested strategies with high win rates. But when you actually try to use them, uh you cannot. And I'm sure you also have experience with that. When I started, and when I started building my strategy, I was testing everything, man. So, and I have background in software as well, so I started making things in PineScript, like making indicators and just reading what they're doing, and like making things complicated for myself. And back in the day, because of the thing that is popular nowadays in this space, in YouTube, in Twitter, and uh, and people usually like misunderstand it, and that's confluence, uh, I think people misunderstand confluence, and they're going to add a lot of tools together, and then they try to like use it as a system, as a like strategy, and they gonna fail. So uh, what my approach was regarding that was actually I tried to test a lot of things, and it was my approach. I mean, with my energy, with my time, I had a lot of time. I just before the stream, I was telling you I wasn't even eating, right? So I had the time, so I put my work in, and I tested everything from indicators to volume to order flow, price action, and even fundamentals, to be honest, like because of we all have some like fundamental approach as well. But uh, I found price action like a fit for myself, and I choose that. I'm not saying that price action is the final goal, and if and there's only way to make money. I literally know a lot of great traders who are making money with like one or two moving average, that I to be honest, I cannot. And uh, and uh, yeah, that was my approach to my system, and I built it little by little during the like past 2 years. And there are a lot of like details in your system that uh, are so small that you're gonna miss at first. But during the time, when the time passed, you're gonna actually try to like fix them and improve them. Yeah, what was your approach when you were making your system, your strategy?
Yeah, for sure. I totally agree on that. Actually, that brings another topic as well, in which, as you mentioned it earlier, like consistency comes from your habits outside trading.
Yeah.
That's something that nobody takes into consideration, because we are so focused on technical analysis. We even let the fundamental analysis out of the picture because it's way too complicated. Uh, but my approach was little by little, actually, because as you said, following strategy from YouTube, from Twitter, is not going to make you profitable on the long run. And I'm pretty sure everyone watching and everyone on the nests want to be profitable on the long run. And the only way to do that
Mhm.
is by you owning your own trading system. It doesn't, you don't have to discover something amazing. No,
Yeah.
you just need to mix the things that work to you and start back testing that. If you use MAs, if you use Bollinger Bands, if you use volume, if you only
Mhm.
use price action, get what's better for you, and just start backtesting that,
Yeah.
and start understanding what works for you and what does not. All right. So my approach, I am a volume and price action trader. Right. Even here, my friend Return built me an indicator for my strategy, which is extremely amazing because it saves me a lot of time. That's what indicators are meant for. They will save you time on something, and they are just indicating something. They are just
Exactly.
indicators, right? And in my opinion, price discounts everything. Okay.
Exactly.
Uh, Price action is extremely important, but you can also use indicators. But as I told you before, like, keep it simple. Don't get your
Mm,
charts filled with uh, 20 indicators telling you different things at the same time, that you are not going to be able to actually get the confluence that you need to,
mm,
and the confluence and the confidence that you need to actually trigger a trade, right?
exactly. Yeah, and uh, so when you started like uh, when as I said, when I started building my strategy, and I understood that the strategy is a must, and I should have a strategy if I want to be profitable in a long run. So I started, to be honest, mixing up some indicators together, and I thought they would work, but but I just started losing a lot of money with them, and uh, uh, now I know that my problem back in the day was not backtesting my system correctly, and it's a very like important step when you're trying to start your trading career, that as I said, like it's like the third time that I'm mentioning. I don't see like good content about it as well. Like it actually gives me the idea to prepare some content with you as well, because you're great at it, I'm sure. And uh, like we know that one strategy cannot work for everybody, like, and like because of a lot of things that like differs people. But uh, when I was backtesting the indicator system that wasn't working, I was like going back in the chart and like uh, using a 3 minute time frame or 5 minutes, something like that. And I was saying, uh, God damn, that's working. And like I go back and back, and all I was seeing was the trades that actually were profitable. And uh, when I actually started to trade, and back in the day, like I was so amateur. I wasn't like I wasn't really uh, I didn't really know about um, uh, risk management as well, so I lost a lot of money with some indicators. But uh, nowadays that I think of those days, I understand what my problem was, and I think that that's the important thing, right? And uh, let's uh, let's actually uh, know your opinion, and what was your approach to backtesting actually? Did you like uh, is the strategy that you have, which is a brilliant strategy based on volume, uh, like did you came up with it at first, like when you started your trading career, or like it just got developed over time?
Yeah, it developed over time. I have been trading for almost 8 years now. So this strategy came up to my mind a couple of years ago, it was developing over the years because there was sometimes that I wasn't feeling comfortable with some indicators and I tried to use another one. So basically, I wasn't style shifting at the moment because I had the picture of my strategy in my mind, but I was trying to evolve it, right? And
Hmm.
that's something important because we want our strategies to be able to evolve over time and evolve with the market because market is always changing, right?
Right.
And that's why it's so important price action because you don't need to follow a specific triggers coming from a specific indicators that are telling you what to do, but you have the reasoning behind it that something is happening in the market. Like right now, we have, I think, in a couple of hours or minutes, we have the FOMC meeting, right?
Oh yeah.
How is how how are you going to approach that? Are you going to trade or are you not going to trade?
Hmm.
Even if your indicator is giving you a buy signal or a sell signal, are you going to take that trade really? Because it can
Hmm.
be just a fundamental candle that it's happening at the moment, and you don't necessarily want that. And that's
So sorry. So what you're saying here is that the strategy is not only the things that give you trade entries with a stop loss and take profit, but it's actually more. You should add like the example that you just gave about the like risk management during news events, right?
totally, totally. Yeah, yeah. The strategy is not only technical analysis. It involves a lot of things like risk management, trade management, fundamental analysis, technical analysis, psychology. In my trading strategy, there are a lot of points that are not only covering my triggers. Like if you see this candle enter at this level with this volume, like that's the easy part. Like you also have to take into consideration risk management with fundamental analysis that I personally don't trade news. Even if I have a trigger, I'm not going to
Hmm.
share any trade because those triggers normally get uh, they are false triggers that are happening because of the hype of whatever is happening at that moment. So another factor to take into consideration is risk management, right? Like in my trading strategy, I'm only allowed to risk up to 2% per trade depending on the time frame and the trigger that I am applying at that moment. Normally the triggers that are more profitable based on my backtesting sessions are the ones that I'm going to take more risk, and the triggers that are not that profitable, then I'm going to take less risk, right? So as you said, there are a lot of things that involves a trading strategy, and those things need to be seen on your backtesting sessions with your journaling, and that way you will get to know what's your edge on trading, right?
Hmm. Yeah, yeah. So we like yeah, great points there actually, because I think what people are seeking when they are like starting their trading journey is that, like as you said, what is the best TA tool? I don't know. What is the uh, what is the best method? What is the best trading model? What is the best? But as I said, I know a lot of great traders that are trading like for like 30 years that are only using like two moving averages, and uh, but they built a system, they backtested it, and they know it's working with the proper risk management. They're making money, right? So with that being said, let's move to the like backtesting a little bit more, and like if you guys want to know, I let me actually share my screen here. Yeah, so what I did after a lot of like uh, like false systems, and the systems that just didn't work, I uh, I started using the replay tool on my system. And uh, I just found a way to backtest, to journal my backtests. Okay, so I'm gonna go into it. Uh, and like the backtesting itself, there's a point here. The backtesting itself is also like so boring in my opinion. Actually, I mean, for me it was, but like in this way I like made it a little bit like more exciting for myself. So imagine my strategy is like a moving average. Okay, for example, I don't know, uh I don't even know what a good moving average is, but like 21 maybe. Okay, so my system here is to buy when we break the moving average, and sell when the like when we're below the moving average. Okay, uh, if I want to backtest this system, I would use the replay tool. And like there's a little bit more to it, so I want to choose like the time periods that are the same. For example, if I want to backtest my system during like the for the during these days, I wouldn't choose like uh top 60, like 64,000 period for my backtesting. I would choose like I would find where Bitcoin was actually range bounding, and maybe in a downtrend. Maybe I would choose 2018, or somewhere around there. But yeah, for the sake of simplicity, right? Uh, what I would do is I would cut the chart with my like replay tool. For example, let's cut it here. Okay, and now that I know my strategy is buying above the moving average and selling below, one uh, the next step is to apply the risk management tools, right? Because you mentioned a great point that uh, the uh, trading system is not all about technical things. Or maybe if you're like fundamental trader, it's not all about that, and there's a like big point there, and it's risk management, right? So um like if I'm going to like uh, get a trade from this system. Okay, for example, now we assume that we break the uh, like a moving average, and like, I want to long, right? So uh, this is my entry, right? This is my stop loss here. And like let's just say for now that I always like target the previous top. Okay, previous top, or previous high or low. Okay, so my stop loss is below the previous low, and my target is the previous high, right? uh, uh so I would look at my risk to reward here, which is 2.6, which is good. I only take the trades over 2R. And again, the this is not this is my strategy. Okay, this is my way of approaching risk management. uh, I know a lot of other like great traders that are using 1R on every single trade that they, or maybe I actually know traders that don't take trades below like 3R, and they always look for trades that look for setups actually that gives them more than 3R. But uh, but yeah, so here the important part is to know how much you should put into a trade, right? We want to go to the to where we want to cover the risk management, right? And one of the most important things here regarding risk management is the position size, right? So uh, if you are actually in the nest, I built a tool called position size manager. There are a lot of free tools uh, in the net you can use as well, and you can also calculate it yourself, but uh, I use a tool. uh, yeah, so this is what I built, and I give it my entry, my stop loss, and my TP, right? And I don't really need it. So it has some inputs. One of them is account balance. Okay, so imagine we only have $1,000 in our account, and you said, Nick, that you are only allowed to risk 2% per trade, right? So maybe 2% is your maximum, or so or based on the probability you're gonna change it. But let's just imagine that we want to risk 2% of our capital, and just remember that 2% of uh, $1,000 is our stop loss. Okay, so risk means a stop loss. When we're talking about risk, we're not talking about the position size. We're talking about the stop loss. This is one thing that I see a lot of people like misunderstand. And uh, leverage, you can, if you're trading a spot, you can use one. And yeah, these are some style settings, so we're not going to. And what this tool, this like basic tool, actually tells me is that, so in order to open your position with 10x leverage, your margin should be $66, right? Then if you open this position with $66, your stop loss would be $20, which is what you want, 2% of 1,000, and you're gonna make 52, right? So now in my backtesting journal, I would prepare I would prepare something like a table, which I only add like a risk to reward ratios for each and every trade, right? So if I play this, so actually it like moves with the chart, so I should put it here, maybe something to change in the future. But okay, so I lost this trade, right? uh so I put -1 here. Why? Because I lost -1 R. I lost 1 R, right? So -1. Okay. So when it comes like below the moving average, okay, I would like uh, just for the sake of example, right? I would take this stop loss maybe here and targeting the previous low, uh, which is here. So I don't take this because the risk to reward is not good. Okay. And okay, so we were above the moving average. Let's say we managed to actually catch the bottom, and we target here, which is our uh, previous high, as we like build in our strategy. Okay, so it's like taking a lot, but Oh, yeah, you can see chopping market here. Okay, so it's going to take a lot, so I'm going to uh, uh, like just forget it, and just I want to show you what I would do on my trading on my backtesting journal if I actually win a trade, and what I do with these risk to reward ratios. Okay, so for example, here if I put my stop loss and my TP here, the previous low, as we mentioned, maybe here this low or this low. Okay, so this is a 3.2 R, right? So I would add it to my trading, to my backtesting journal. So 3.2. Okay. And let's imagine we had like a 2.5 and another minus one, another minus one. Okay. And if, for example, 4 hour trade here. Okay. So Nick, I know that Ural's also using this approach, but this is so easy for backtesting because your only problem is one number, which is risk rewards, and then you should like add these numbers together, right? So maybe so minus one minus one minus one uh, plus 3.2 plus 2.5 plus 4. Okay, so I made 6.7 R in total, right? Okay, so what this 6.7 R actually is it's a multiplier of my stop loss, as you know. So if I risk only 2% on each trade, okay, uh, which is $20 when my account is at $1,000, as we imagined at the beginning, right? So I would make 6.7 times my stop loss, right? Which let me actually do it like this, and it's 134 dollars, right? So this is how I approach it. So I know after these 5 trades, I would make and like when I only risk $20, I would make $134. Uh, um, I don't really calculate win rate for this part. I don't really. I'm not really. My problem is not like the entry. Where is my entry? Where is my stop loss? And this is the way that I do it. So, but I know you've actually made a Notion template for it, which is great, and like I really recommend everybody to use it actually. So maybe you can like walk us through it a little bit and like show us how you would like do it on your journal.
Yeah, for sure. So uh, this will be only a quick introduction because I will be doing a live stream on Saturday explaining how to properly use this trading journal, which also includes a trading system in which you will be having a calendar that will let you write all of your trade setups and trade ideas for that day. All right. So I take the same approach as Rasun. I only use risk to reward because, as he said, basically the risk to reward is a multiplier for my risk. All right. So in this example over here, which is gold long, I will be entering the entry date. You can also include time for this, which is extremely important after you start journaling to know which are the trading sessions that you are being more profitable on. right? Because if you're trading the London trading session or you're trading the New York trading session, you would like to know which is the best hour for you. All right. The close date, obviously, when the trade has completely closed, it depending on your trading strategy. If you close the trade on stop loss, on a trailing stop loss, or you manually close it because you had some reversal trigger, right? The instrument, these are the instruments that I personally trade. I also trade legacy markets, Bitcoin, Ethereum, S&P 500, gold. If I want to choose, in this case, it was gold. I'm going to choose gold. The entry signal, let's say you have entries because you're using a 1 hour hammer candle at support, or you're using a 4 hour inside bar breakout, then you add it to your trading journal. You're going to write here the risk to reward that you are using on the starting of the setup. All right. So in the case of the previous example of Resurn, let's say we were using only 2 risk to reward. All right, 2 to 1. You can add here the trading view link for your trading setup before and after, because that way when we are reviewing the trading journal after the week, we're going to see how was our entry on the trading setup on trading view, which is going to give you a better understanding of what you did well or what you did
Hmm.
wrong. All right. After the trade is closed, you can add another picture of the trading setup, and here you're going to put the risk to reward P&L. All right. If you reached full target in this case, you're going to use 2 because that was your original risk to reward.
Hmm.
Or if you lose it, then you add -1. Right. It's the same approach as you did. You're going to have the sum here automatically, the average risk to reward that you are using, which is a very good metric for you to know which is the average risk to reward for your trades after 50 or 100 samples of your back testing or your forward testing your strategy. You can add a detailed description of why you took that trade, what was happening at the moment. You see what trigger a detailed description in your own words of what that trade, why you took that trade. Here, you're going to put a detailed description of your emotions and lessons that you learned from yourself on being on that trade, which is extremely important because this is not only a trading journal, but also a psychology journal that will uh, give you some type of emotions that you can add. So let's say I was feeling anxiety, or I was calm, or I entered this position because I was FOMOing, right? You can add it, or I was revenge trading, and you can also add your USD or P&L, right? If you won here for $100 or you lost $100, right? Just for the sake of simplicity, basically, all of this data will be available on your broker, right? How much you win and how much you lost. But
Yeah,
this is
exactly.
so there's no need to fill this. But if you want to have another data
Hmm.
for this, then you can do it. And this will be addressed on like a full explanation on Saturday, and I will be sharing this trading journal with you guys for you to be able to use it. And that's why I made it on Notion, so you can duplicate it and start using it as soon as possible for your back testing sessions or for your live trading, right?
Yeah, so if anyone wants to access it, they can actually approach to like your channel in Discord. I think is it in your channel, right?
Yeah,
Uh,
for sure.
yeah, and yeah, if you couldn't find it, maybe like tag us in the chats. We're gonna help you regarding that. And yeah, actually, you've made a great template in my opinion. It's so easy. You're basically doing that with only clicking, not just uh, uh, calculating everything, like finding. And so, some tickers are just so hard to like fill in. When you're especially when you're trading FX market. Uh, and there are a lot of like Excel sheets and templates out there, which I don't really recommend, especially for the beginners. Maybe if someone wants to have like more data, because uh, as you said, like all these data are available on your exchange or your broker. So if you really want statistics, uh, you can go there and find everything, right? uh, and but for the sake of simplicity, and if you don't really you don't really want to put a lot of time and like bore yourself, to be honest, you should use something like this was my approach to it. And uh, I was so happy that saw you're actually doing it. But yeah, this is great. And another thing that actually I want to add here, I have another journal as well, which is only handwriting. Okay, so and I use it only for my spot trades. So and I don't really trade a spot too much, but just for like a longer time, longer term investing or something. I when I buy things or like trying to hold things, I just put them there, which it is template on my tablet, but I just fill it by my hand. I just do, it's like handwriting, right? And uh, that's because like I like that as well, but I don't really have the time to put to like do do the same approach for my low time frame trades. uh, but I can do this for my like uh, spot holdings, because I don't really the quantity is not too much, right? But yeah, this was actually one of my approaches as well. Maybe someone like enjoys doing that for like their low time frame trades as well. I know actually, so some people do. I know some people do the huge Excel sheets that we mentioned as well, and I know people like using our approach, and they're all profitable. So there's no method that is uh, only for the profitable traders, basically. And you should try and you should like try and like find your best method for yourself. So we're running out of time a little bit, and maybe if you had anything as an outro here, fast.
Yeah, for sure. It was nice talking to you, Return. I recommend everyone that has started trading or it's trading for a couple of years now that you start journaling. I will be sharing my trading journal on Saturday with you guys for you to be able to duplicate it or just take the main points that you like and create your own sheet on Notion or Numbers or Excel, whatever. It's just make it simple. Try to approach trading in a professional way because this is a professional business. This is not a game. This is not about gambling. And and yeah, that will be all for me for today. Don't forget that we are having exclusive giveaways on the Burp Nest. You can actually find the giveaway secret code here below. Free Trading Congress. You can find the link on the live stream description. And that will be all for today in my side. Thank you guys for joining me and return. See you soon.
Yeah, thank you guys. See you around the nest. Let's go.